What's going on, everyone? So today I want to go over GBP USD because it was super dirty between last night for London and opening for New York. So let's get into it. Number one, there was no news that affected the market today, right? So we had no high volatility for USD and no high volatility for GBP. So this is the United States dollar. The correlation between the dollar and GBP, if the dollar is going down, that means XXX USD pairs are supposed to go up and USD XXX pairs are to go down. So GBP USD would be an XXX USD pair, right? That means USD is a primary pair and all the other pairs are secondary pairs. So don't overcomplicate it. So if the dollar is going down, then respectively, dollar pairs who are primaries, such as USD XXX pairs, are going up. Not that hard. So GBP USD, all morning we were waiting for this, right? We can see that throughout the session over here, right? We can see that the market was just playing around, gave us this triple top, and it came back down, induced the shit out of sellers, and then took off. So if you were looking at this, right? Let's say you got an over here stop loss of 10 pips, right, above the high because you're looking at this high. Right? So 15 pips, 10 pips, whatever. And you got 30 pips, 40 pips. Get out. If you got into that, but I'm pretty sure they didn't. And like we told everybody in our chat today too, patience and discipline, no impulse trades here, right? So the reason why we weren't crazy to execute into a pair is because we didn't have any confirmations. We didn't have our price action. We didn't have any breaks and retests of zones. We had a breakout to the downside over here, barely, because look at this, right? Barely came out, and the buyers came back in and shifted and took all their money back and then some. So let's go look at it throughout the higher time frames. Look how strong this bull candle came in for New York session at 9 a.m., right? So London sessions from between the hours of 3:30 all the way up into 8 a.m., and you have nothing. Nothing's really happening. And then New York session opened at 8 a.m., didn't get anything for the first hour, and now it's 10 a.m. over here. That 1 hour, we got that huge bull momentum. This is why we don't force trades. This is why we want to make sure that we have all our confirmations lined up, and then we execute into a trade. So we had no news. We have GBP USD on the 1 hour time frame. We were looking for a sell for this pair because on the higher time frame, we can see that the high is held over here, a breakout over here, and now sellers are trying to push it down, but they're not succeeding. So this pair could potentially go up and continue. But the way it played out so dirty on the lower time frames, it's insane. Now, what's going on in the world? Let's go take a look at gold, right? Gold, I believe, shot down throughout this time over here, and now look what happened. Took all its money right back. The market is not moving nice this week. The market is shitty. Does that mean that we take time off? No, it does not. What it means is we have to go back to work, practice our discipline, practice our patience, practice our consistency, and practice our confidence. Is it a lot of pillars? No, it's not a lot of pillars, but what it is you don't want to force anything. You don't want to just wake up and say, I need to make money today. That doesn't work. It just doesn't work that way. You want to make the market work for you. So let me go into some more stuff. So we have a zone over here. We're going to take our horizontal line, put it across, and throw another one down here for all of these lines. We can see the market playing out of here. This is a good zone to zone to zone. Broke out of our zone, and I bet you sellers held their entries. Why? Because they probably got in over here somewhere and had this confirmation and took it right back. If this is to happen to you and you're in profit, let's go get a ruler again, and you're in profit. Let's say you got in over here because you had this zone, you're writing it from up here, right? And you got into here. What? Oh, this is gold. Sorry. Whoa, I'm looking at the pips. Now, not every pair gives the same pips. GBP USD gives you a certain volatility of pips. GBP pairs are pretty strong. And for gold, the pips are different because look over here, that's almost 1,000 pips, and coming down here is another 1,000, 1,500 pips, right? So you want to be able to make sure that you're compounding your accounts. What does that mean to compound your account? It's risk management. It's being able to trade, understand that you're going to lose some trades, but at the end of your week, you should log your trades every day so that by the end of the week, you're able to go through your log and, hi Bella, that's my cat. You should be able to log all your trades and make sure that your risk to reward ratio, you want to have more wins than losses. That's how you become profitable in trading. So does that mean you have to trade every day? No. Trading fits into your schedule. Some people trade every other day, every day, and some people trade once a month. Now, who's better than the other? Neither. Because the person who trades once a month can catch about 1,000 pips, and the person who trades every day can catch about 100 pips a day. Now, in 10 days, he's already caught up to the 1 month. So however you want it to work into your schedule.